Hey everybody, it's Barron Shannon from AlphaTrends.net. Today's Wednesday, the 21st of June, 2017. Hey, and the S&P 500 finished with a small loss here. We are still, of course, in a major uptrend on the weekly and daily time frames. Intermediate term, we're kind of stuck in a range here, and that range being defined pretty much by the prior resistance here, which has become support, and the 245 at the top end. When we take a look at what I consider to be the more important volume weighted average price level right now, we need a 65-minute chart. And on this 65-minute chart, what we're basically looking at with the moving averages is a 5 and 10 day moving average. If you're not familiar with that, then I suggest you take a closer look at Alpha Trends. Anyways, the volume weighted average price from the gap lower here in May, and then from that low, you can see kind of forms this little band in here. And I think that's going to be continue to be the more important level that we want to see this market hold. As long as we continue to hold in this range, basically, it's a range-bound consolidation within an overall uptrend on the daily and weekly time frames. So, resolution of a consolidation tends to resolve in the direction of the primary trend. Although, if it was to break significantly below that, then perhaps we'll get a test of the 50-day moving average. But for right now, it's just sideways action in regards to the S&P 500. The Nasdaq also kind of reeling here a little bit from the most recent sell-off, and that sell-off has been finding support at the volume-weighted average price from the mid-April low, which comes in just above that 50-day moving average as well. So you could say which one's providing support. It doesn't matter. The fact is, this is where our key support is right now on the intermediate term that we want to continue to see holding above that. But shorter term, when we look at a 30-minute time frame, there's a couple of important things that reveal themselves here. One, the volume weighted average price from where that sell-off began. You can see I just drew that in right from here, and it struggled with that a little bit, but the last 2 days we've seen that it has held as support. That's also where we see this rising 5-day moving average. Now, just above we have this little level here that was prior support. That prior support did act as resistance on the initial bounce. Now here we are back to that level. We have a higher high above a flat to rising 5-day moving average, and I'd like to see that if we can tomorrow get back above this level and then see 140.50-ish hold as support in this general area, then I think the Nasdaq will likely head back up towards the high end of the range here. But if it was not to do that, I don't view it as a major negative anyways, because again, we're still in a major uptrend in regards to the Nasdaq. And people talk about this big volume down here, and certainly there has been big volume, but the important thing is, what does that volume mean? That is, who's in control. So going again back to the 30-minute time frame and taking the volume weighted average price off of there, what it tells us is the average price since that peak is right down here at about 139.5, meaning that the average participant is making money and feeling good about buying on that pullback there. The Russell 2000, it is making lower highs. You can see I've drawn that in. Since pretty much the first week of this month, we have these lower highs, and we have the volume weighted average price from that May low here that we closed below once again with a declining 5-day moving average. So the Russell 2000 is under a little bit of consolidation, and nearer term, in order for the buyers to regain control, we're going to need to see, most likely, I think, for back to neutral would be above 140.75, and then positive would be something that would look like this. That would be the bullish scenario we'd be looking for to add to any long exposure in the Russell 2000. Otherwise, it doesn't make sense to buy while it's pulling back. Not for my style of trading, at least. I'm not a buyer of a prior resistance becoming support, because sometimes they fail and continue lower. So on the daily time frame, though, again, it's hard to make a bearish case when you see we have a rising 20 and 50-day moving average, and we're pulling back. This market is making headway, but doing so in a very begrudging way for all of this year. Realistically, the semiconductors look a lot, of course, like the the Nasdaq. That is, the daily time frame. We had the sharp sell-off. It's been consolidating and stabilizing with a rising 50-day moving average, and looking down to a 30-minute time frame, the volume weighted average price off of that peak we're struggling to hold back above it, and we are realistically just kind of range bound in here. This is, the band of resistance that we're going to need to get above and hold above for the buyers to regain control. Here's our band of support, and right now, the way I view the semiconductors is neutral over the intermediate term, but of course, within a much bigger uptrend, if it continues sideways, I think that builds for the next move, and it will be dependent upon not only if it breaks above or below this range, but how it does so. In other words, we would like to see it maybe rally up, create a higher low, and then get going. Or if we're looking for short exposure, break down and maybe slightly through, rally up, create a lower high, and then break down. Right now, we can try to anticipate any scenario, but the message of the market right now is that it's neutral. It needs some time to digest and tell us what's happening. Meanwhile, the big winner, of course, is the biotechs. These guys finished with a great gain here again today, up 4%. So if you recall, what we've been focusing on are two volume weighted average price levels. The volume weighted average price year to date, we noted that it broke down below that late last month. And as I was saying, I thought that was a bearish trap, and it confirmed it when it got back above there. But the level that it touched almost precisely intraday, and that's what helped create an environment for from a failed move came that fast move, was the volume weighted average price since the election. So what we had here was a bear trap. I've been outlining that on Twitter. But from that failed breakdown, we rallied up. We broke this trend line right here that we've been referencing for the last month and a half, and I didn't draw that properly, so let me just redo that. And from there, the buyers have regained control since the beginning of this week. Some people want to know, I can't believe that people are now asking me, where do I short the biotechs? The buyers are in control, and what we're going to start to look at is key levels such as the volume weighted average price since this move began. The move began right here. Well, Monday afternoon we touched it and found buyers. Yesterday we touched it and found buyers, and that will be something that we continue to look at. I don't see any sense in chasing a move like this right now, but the buyers are in control. Don't short it, and there will be better lower risk opportunities to purchase at some point in the future. When that is, I don't know. It's always a developing story, so stay tuned.